we got to talk about silver. Silver's freaking out investors. Was this it? What we saw last week? Was that fake out the low? And now silver's gonna rally and the miners are gonna rally, and we all missed our buying opportunity to buy or add silver into silver miners? Silver does look a lot better than gold in the charts, but there are still some serious warning signs that we need to pay attention to. We're going to talk about it today. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to the World Championship show, Hot Trades of the Day. Let's go, Knicks. The New York Knicks did it. I cannot believe it. I'm in Warsaw right now, so I was following the game throughout the night. I think my Polish neighbors called up numerous priests and asked them to come over immediately to perform an exorcism when they heard me screaming and yelling in the middle of the night. All worth it. Unbelievable. The Knicks, the champions. And again, who cares that my name is Daniel Wilhelmi? I care that you're here at this show. What did I tell you weeks ago about Wembanyama? He's French. When have the French ever won any war in the last centuries? Plural. So, let's get into silver and what I had told you about silver and where we stand. So, you follow this channel for a while, you know that I've been saying for a month, silver needs to test the 200. It's very likely we're going to undercut the 200-day moving average, and we're going to undercut the lows, and we may retest the uptrend or undercut it to fake out the majority of the investors, because then silver would not go down to $50 an ounce like the silver bears are predicting and the pure technicians, or down to this zone coming here from the highs in October, which is really around 55. Now, the first two parts of my thesis and my analysis have played out so far to a T, but we have to wait and see if the rest plays out as well, because this could be also a fake out for the ages. So what we have seen is the waterfall sell-off that I predicted. We have seen the test of the 200 as I predicted. We have seen the undercut of the 200 and the trigger of the stops and liquidity grab. But just when everybody was getting ready to call silver dead, it turned on a dime when Trump made the announcement for the Iran peace deal, which is happening, and we'll see how long that will last. But the result was that silver, and this is important, never made a new intraday low. It made a new low on the close, as you can see here, after we broke the 200 and confirmed it. We made a new low on the close. That was the lowest low since December. So basically a 6-month low. That is significant. It did not matter though, because what triggered the short squeeze in silver, and this is what we're seeing, we're really seeing a short squeeze, because fundamentally, really not much has changed, was the Trump announcement that came out of the blue. So that caught a lot of the short sellers off guard, and that's what you see. That is why silver is jumping above the 200-day moving average so quickly, because it is an artificial situation. It's a short squeeze. They need to cover. Doesn't matter what the technicals say. Now, if you watched my video on gold over the past weekend, I recommend that you do so. If you missed it, hit the subscribe button. That could really help you out, because that could avoid that you miss any of the videos where we talk about developments early and being ahead of the market. So silver is heavily influenced by gold. And here's a very important fact. Silver can't decouple from gold. It can outperform gold in a bull market to the upside and the bear market to the downside. But what you never see over a longer term is that gold doesn't do anything or goes down and that silver is able to go up. So the number one factor for silver really is what's happening in gold. I talked about the situation in gold in the gold video. Don't need to recite that. Go back, watch the gold video from the weekend. It will help you a lot with understanding the situation for gold and therefore for silver. The other part, obviously, is the industrial part of silver, and that is mainly solar. And I've told you for weeks now, I expect a big comeback in solar and the solar industry, which is great for silver and the silver demand, which will put even more pressure on the supply deficit that we have in silver, which is now rolling into year 6. Even leaving out that we have China importing silver and starting to hoard silver, in my opinion, trying to corner the silver market. Now, the narrative, again, this is important to understand. I've pointed this out in previous videos. It's something that a lot of retail investors have a real problem with. The stock market is not about facts, or it is about facts and fundamentals, but what it is really about is what are the narratives that the market wants to hear and wants to play in correlation with the facts. That is the important part. That's why you have so many people that are value investors, that are trapped in stocks that are cheap and that have great businesses, but the stock doesn't go anywhere and they don't understand why. And the reason why they don't understand why is because they don't understand the concept of the narrative. They understand the concept of the fundamentals and analyzing it, but that alone doesn't matter. What matters is, what's the narrative? Is this a story that's hot in the markets right now? Is this a narrative that the market gets behind, that investors get behind? And the perfect example is uranium. The fundamentals for uranium have nothing but improved. You look at the uranium spot price, you look at the long-term uranium price, which is the one that is used for contracts between the utilities and the uranium producers. They're going bottom left, upper right, but uranium stocks have done nothing. And then out of the blue, like 2023, they get red hot. What has changed fundamentally? Nothing. It was a data story, AI data story then, it's an AI data story now. Nothing has changed, but then it was the narrative that the market wanted to hear. Now, the narrative, if you follow the market, I've pointed out here on videos weeks ago, so again, subscribe button, you don't miss the video, so you're ahead of the market. Again, I'm a national champion, so I know what I'm talking about. Okay, whatever. Now the narrative, AI data centers, same boom story, different narrative. Now it's copper. Now all of a sudden it's not, oh, we need the electricity. Now the narrative that the market is playing is, how do we get all that electricity to the data centers? And that's the copper story. So if solar is the big fundamental story in the industrial part, that narrative in the stock market is closely tied to the oil price. The oil price has been gone down significantly as a result of the peace deal. We will see if this happens. So if you're a silver investor, if you want to invest in silver, we will do this here on this channel and I'll keep you up to date with it. We now have to watch the solar stocks very closely and see what's happening with the solar stocks. Are they holding their strength that they developed in May? Or are they starting to weaken again with the oil price going down? If that happens, then we know, aha, we have a narrative shift. That might be bad for silver short term. If not, then things stay positive for silver. On the charts alone, the chart looks really good and positive for silver short term. There's no denying that. As you can see, we broke the downtrend. We jumped back above the 200. Again, that's unusual, but that's the short squeeze special situation. And now we're hitting this blue resistance zone. By the way, I need to make this yellow now. Things changed so fast last week that I wasn't even able. So here we go. So there's the yellow resistance zone. As you can see, it comes from the lows that we saw here on the first leg down, the closing lows. Are we able to take out this resistance zone? Anything is possible, because we're talking about a short squeeze situation that has nothing to do with normal technical analysis or fundamentals. And then this target zone would be around $74 in silver, and then we would have to see. Now, the question that people are asking is, man, I went through all the pain and then I didn't get in on the lows. And did I miss the boat already? What should we do? The first things first, and this is really important, though it sounds trivial. Don't be upset. I'm serious. When I'm not in the States, I'm mostly in Europe. I'm sometimes in Asia, in the Middle East, but mostly in Europe. So I get ahead of you guys in the States and in Canada. Obviously not ahead of the Aussies. The kangaroos are ahead of me. But I look at the commodity markets, for example, earlier than the Americans do. And I can tell you, and I said it on a video here, this leg down here, right, that everybody's pointing to say, this is where I should have gotten in. You could not have gotten in because it happened in Asian trading. I've been telling you for weeks we're going to make the lows in Asian trading. That's exactly what happened. So now if we analyze this chart, and again, this is important because we need to look at charts realistically, not what was the perfect scenario to get in, because that almost never happens. What was the realistic scenario to get in order to avoid to get too emotional, to get too high or get too down about decisions we made, which then may lead to bad decisions. So realistic would have been something around 65. That's a realistic entry point for European and Americans, where we could have said, okay, we might want to get long here. So we're really missing like $5, $6, not even 10%. That's nothing to be too upset about, because we have, because of the short squeeze, this monster gap open. And we also have, if you believe in gap close on the close, not intraday, a gap right here. So this is the big one. So we're going to stick with this one. I just want to point this one out. So this one is at 68. And it's below the 200. Interesting. And it would be in an area of a retest of the downtrend. So that we just broke with today's short squeeze. So the probabilities, even if we go up to 74, are pretty high that we're gonna see gap fill. And that would be interesting because it would undercut the 200 again, probably trigger stops, probably trigger all the people that say, aha, now we're going down. Now my buying opportunity is coming. And it may. What I'm trying to say is, I don't think we're going to go anywhere up to 87, where we were a month ago, in a straight line. Again, watch the gold video. The gold fundamentals don't support this. And if gold is not going, silver is not going. And again, oil going down, solar narrative, we got to watch it. So that is not really super positive for silver. Really, the only two things that are super positive for silver, right? Well, three if you want to call the pair trade and with the hedge funds. But the other two is the silver squeeze and the much improved technical situation in the charts that we see right here. So I'm not going to jump on silver right now. And I'm going to have a hard day today because the silver miner is going to jump really high today. But that's the way it is. I have to suck it up. That's okay. That's part of the game. And again, you might do something different. You're not, I'm not your financial advisor. You're definitely not my financial advisor. I think we have to wait and see once this Iran peace deal cools down, the euphoria about it, right? Again, think about it. Oil price going down sharply. What's the narrative going to be? Inflation is going to go down. Is that good for gold? No. Therefore, is that good for silver? No. So let's keep a cool head. This could have been the fake out, it's true. But I'm not so sure about it because we had negativity in the market, but we did not have panic and we did not have capitulation, which I would have liked to see. That's really the type of sentiment when you know that we hit rock bottom. And fundamentally, nothing has changed. And now we're going to see it as a narrative change for silver in the solar sector. And what happens once the market says, okay, so we'll see what happens with that peace deal with Iran and the Strait of Hormuz. And when are the shorts reaching the point where they say we don't need to cover anymore? So a lot of artificial factors right now that can move the silver price to the upside very short term, but in reality, the trend is still down. So that is the scenario right now. Again, I wish I could tell you something more positive, right? The chart is positive or more positive. We did not make, but really what the positive is, we did not make a lower low. So on the scale of what are the positive signs, the most positive sign technically in the charts has been we did not make a new intraday low. We made a new low on the close. I pointed this out, right? New 6-month low. So if you go by closes, low, lower low, lower low, right? High, lower high, lower high. So therefore, we are not out of the woods yet in silver. It's too early to book the flights to Ibiza for the big silver party just yet. Have a great day. Man, it's going to be a good week for me. The Knicks won it all. I can't believe it. We'll talk tomorrow. Bye-bye.